in any economy, and this is a fundamental fact, there's two aspects. There's supply and demand. Supply are the amount of houses available for sale. Demand are the buyers are looking, which we measure are affected strongly by interest rates. So let's take a look at interest rates. The good news is rates have stayed below 7%, closing today at 6.83%. Now, it's not monumental that it's below 7 or slightly above 7, but it's been in the same range, as you can see, for over a year and a half now. And this is a market that is able to keep a consistent, reasonable supply of buyers coming into our marketplace looking to buy property. So that's the good news. On the supply side, that's how many homes are for sale. And for the post-pandemic period, we've had historic little inventory. Take a look at this number. We have 568,000 homes for sale nationally, versus last year we had about just under 500,000. So we're about 12% more than last year, more than the pandemic years, but below all the pre-pandemic years. So we still have not recovered to a normal amount of inventory to support a healthy real estate economy. We've built less houses, and you can see this year, the inventory number is declining, whereas last year it rose a little bit. So you can see that the problem is not getting better. We're not on an upward or positive trajectory, we're on a worse trajectory. Now, real estate is very much a local business, and so we want to make sure that we understand the market here in Los Angeles if we're going to evaluate those who are in LA. And you'll see that according to Altos Research, which is a great service that I use, they show the market to be a 40, excuse me, which is a modest seller's market still. Now, that number 40 had been at 41, 42, and has been slightly moving back towards what we call an equilibrium, but still is definitely a seller's market. And you'll see the different factors showing, and statistically overall, given the inventory and what's available, things are staying in that realm.